My name's Jacob Royall. I'm going to be your host this evening while Michael and Ron are on a motorcycle trip across the country. Great USA. I don't know. They might end up in Canada. Who knows? But Michael certainly ain't doing no webinar while he's on a motorcycle. And just to let everybody know, the broadcast will be recorded and I believe posted on YouTube at some point. We don't need to see this anymore. Everybody understands trading is a high risk, high reward endeavor, monetarily and emotionally for some people, unless you're one of those kind of people that it's like a fighter pilot, like Tom Cruise in Maverick. Anybody seen that? It's a good freaking movie. I'll have to tell you. It's a good movie. I highly endorse. It's a real good movie. It's a real feel good, good old American movie. 17. That's pretty close, Michael. Pretty close. How many people traded today? Okay, so we got. Oh, Ted, yeah, welcome. Susan, yeah, I know you're a customer. Welcome. Good to see you. 18. I think we're gonna let's call it good. Let's get rid of this thing. Nobody wants to see that anymore. Oh, they're everywhere. They're everywhere. All right. I've been trading all week actually. I've been trading all week. My Apex accounts, I have 4 qualified PA performance accounts with Apex now. And I'm also using the Apex Trade Copier and copying into 6 additional evaluation accounts to try to get those qualified as well. So my goal is to have 10 qualified accounts and then just to shoot for a small amount of profits each day and copy the trades across 10 accounts. So if I make 200 bucks just using micros on the NQ times 10, that's 2,000 bucks. So that's what I'm practicing with now. So let's see. Okay, I still can't quite understand who's a customer or not, but it's all good. Let's go through some slides. Let's go through some slides. Oh, look, there's me. There's me and my dog. That's Lexi. That's me. My name's Jake. That's me up in Tahoe. I don't feel like using the camera for the webinar. I don't know, but there's a good picture of me. Okay, let's get down to business. We got 19 people. Back to the Future Trading. We're the only company, I say we, I'm a customer who's, I guess I should really introduce myself for people who aren't customers yet. The purpose of this webinar is to really, there's a couple purposes. One is to, I don't know, build a continued sense of community within Back to the Future Trading with all of our customers and just check in and say hi every Thursday and maybe learn some things for existing customers, new ways to go about trading or not trading perhaps on particular days. And then I'd say the other purpose is to sell the software because that's what Back to the Future Trading Company is. It's a software engineering company specifically for trading. It's trading software. So anybody who's not a customer, usually at the end, if I was a sales guy, which I'm not, I'm a customer who I trade professionally, and I have apparently nothing else better to do than host this webinar right now. And I love trading so much that I do things like host this webinar. I'm also Back to the Future's official mentor. So if anybody wants mentor hours, just reach out to me. My email will be at the end here. So we got a couple of different jobs. Anyway, the second purpose for the webinar is to sell the software and show non-customers what it can do. So, software like this, it does cost money. It's professional, institutional grade trading software, and it comes with an edge. It comes with a quantifiable way to trade the markets. Okay, yeah, I think that's good. We're the only company online that gives the times and directions in advance. We actually, I guess I can say we, since I'm the official mentor. We at Back to the Future are the only company that gives the times and directions of the upcoming moves in advance. That's not to say that every single time it's going to be right, but the majority of the time, and by majority I mean there is an edge. There's certainly an edge. I've been using this software for over 2 years now, or close to 2 years, and I have back tested more than I care to elaborate on. Maybe it might border on psychopathic. There might be a little of that going on as far as how many things I've back tested and sim traded and live traded, of course. And no matter how you slice it, over the course of multiple trading days and or weeks, depending on the time frame that you're trading, it does end, the equity curve does end up profitable. And a lot of times it doesn't take long. Sometimes it happens in the first few trades, or in a day, or in 2 days. But by the end of the week, we're in profit, and that's what matters. Well, depending on if you're trading a daily time frame, maybe not. And we also give you the trading rules in advance. So what we do in this webinar is yesterday was Wednesday. Well, you know what? I'm just going to get to that slide here in a second. My big thesis is that although the world looks messy and chaotic, if you translate it into the world of numbers and shapes, patterns emerge, and you start to understand why things are the way they are. I 100% concur. When I look at a chart without Back to the Future trading software on there, without Warp, I feel like I might as well be out in public without clothes on. It just feels uncomfortable, almost embarrassing. It's almost embarrassing for me to try to say, oh yeah, I'm gonna start trading that chart and look for pullbacks and 50% retracements, and oh yeah, I see the support there. Yeah, or maybe I do, but it would be awesome if I had a piece of software that looked back in the historical data and told me what times I might expect an up move and a down move, what times the banks, the institutions have been buying and selling, what times keep coming up over and over and over and over again. I want the computer to figure that out for me. I'm not going to be able to do it on my own. No way. Just sitting in front of the trading screen for 2 hours in the morning for my morning session, that's hard enough. A 2-hour trading session for me might as well feel like an 8-hour workday. It can be exhausting. It can also be exhilarating, but we have to watch out for feeling exhilarated in our trade. No pun intended, because once that happens, then you can start doubling down, getting excited, and then oops, oh darn it, blew my whole account. Anyway, I want to be the software that can find those patterns for me and plot them out into the future. No other trading software company that I've found as a customer, nothing gets close to that. One of my issues before Back to the Future trading was patience. I would watch the bars and the wicks and like, oh, now, how about now? How about now? And I would overtrade or undertrade. Now with Warp, there are definitive times and windows of time where I am allowed to go long or allowed to short the market. My experience with the 36 interviews conducted for this book and its predecessor leaves me with little doubt that the random walk theory is wrong. Absolutely 100% concur with that. I don't know how many of you folks have read Market Wizards or the New Market Wizards. I think there's another one. I've read all 3 of them. The markets are not random. Absolutely not. Because, I mean, if any of you folks thinks the markets are random, I don't know what you're doing here. Oh, coconut water is so good. Does anybody else drink coconut water? Coconut water with mango today from Sprouts Farmers Market. Mike Lewis had Flux for a long time. and started back with TachEon about a week ago. Nice, nice, awesome, Mike. Okay, let's keep it moving. Oh yeah, this is what I wanted to mention earlier. So on Tuesday, Back to the Future Trading, we send out these histograms, these little histograms, the timelines of when the trades will be for Wednesday and Thursday. Or not the trades, when the signals will occur for Wednesday and Thursday. That doesn't mean that they're trades, but the signals, we send out emails on Tuesday for all of the signals for Wednesday and Thursday. And then on Wednesday and Thursday, we'll pull up well, not Wednesday, obviously, because today's Thursday. On Thursday, we will pull up charts from Wednesday or Thursday, and we'll see how those times worked out. So what this does is it basically makes it impossible for Back to the Future Trading and for the software and for me and Michael and Ron, Rachel, everybody here at Back to the Future, and Dave's a new guy. It makes it's impossible to cheat. We're not pulling one over on anybody. It's trading software that works. And again, it's not going to work on every trade, but it does end up with an edge, and sometimes a significant edge. It can be amazing on a lot of days. So like I was saying, the signal is raw information. The setup is the specific trade rules, and we'll go over, I haven't decided if I want to just do dot to dot today when I'm going over some charts, or maybe we'll take a vote on it. Ooh, I've never used the vote function on GoToWebinar. Oh, that would be cool. Maybe I can figure it out in real time. 34 people. Wow. What's up, everybody? I'm going to pull this thing down a little bit. This little thing that tells me how many people are here, and see if I recognize any more names. Welcome, Alan, Rahat, Chad. Rahat, have you bought the software yet? There's actually two gentlemen with your name, and I confused both of you. The first name, hopefully I'm saying that right. One of you guys has bought the software, and one of you hasn't yet. Maybe today will be the day if you're the Berhat who has not. So yeah, let's well, I don't even know what the next slide is. Let's just find out. So the setup is the specific trade rules. So there's cross up. I don't know if I want to use these slides or not, or just go over it with you guys. Yeah, I'm just going to go over it with you guys on the chart. I love this quote. I've read Mark Douglas Trading in the Zone 6 times. And by read, I mean on Audible, because who reads books nowadays? I don't. It hurts my neck. I want to lay down, drive, have somebody read it to me. So yeah, I've read this book 6 times. 6 times. There's a random distribution between wins and losses for any given set of variables that defines an edge. That's the main thing that I have to remember every single day that I'm trading. This truth makes trading a probability or numbers game. When you really believe that trading is simply a probability game, concepts like right and wrong or win and lose no longer have the same significance. As a result, your expectations will be in harmony with the possibilities. Frickin' book is so amazing. It's so amazing because it's not just trading, it's life psychology, it's philosophy. It's life philosophy, Trading in the Zone. Highly recommend it if anybody hasn't read it. Oh, nice. I'm glad that, yeah, it looks like somebody. Oh, what's up, Dorian? Thanks for saying hi. Janice? You have that that little dash hyphen thing over your A on your name there, and I don't know what that is called when that, but I feel like I'm not pronouncing your name right. Don't know. Let's see here. What's the next one? Oh, no, I do want to go over these. The 5 fundamental truths of trading. I actually have these written down on 3x5 cards, always on my desk at all times when I'm trading. These are Mark Douglas's 5 fundamental truths. Number 1, anything can happen. That's my mantra when I'm trading. Literally say it over and over again in my head multiple times during my usual 2.5-hour session. Number 2, you don't need to know what is going to happen next to make money. You could literally just push a button, push buy or push sell with your eyes closed, and you might make money. You might lose money. The idea is to get an edge and to get some kind of quantifiable, repeatable way to have that edge. Number 3, there is a random distribution between wins and losses. A random distribution between wins and losses for any given set of variables that defines that edge. Number 4, an edge is nothing more than an indication of a higher probability. It could just be a slightly higher probability, just slightly. And maybe your second position is a 3-to-1 and your first position is a 2-to-1. We can lose like 65% of those trades and still be a winner at the end of the day if you take enough, after a certain amount of trades, depending on some other factors. An edge is nothing more than an indication of a higher probability of one thing happening over another. And number 5, every moment in the market is unique. That's my other mantra. I repeat this thing all the time. And then the other commandments of trading in the zone are the 7 principles of consistency. And there's a little voice in the back of my head like, Jake, you're wasting your time. People want to look at charts. Like, that's cool. We can look at charts all day, but I want these things. If I'm watching the webinar right now, I'm like, I'm not minding that this Jake guy is drilling this stuff into my head. It could be argued that the 7 principles of consistency and the 5 fundamental truths of trading by Mark Douglas, the godfather of trading psychology, it could be argued that these 2 slides are as important or more important than anything else in trading. Then it could be argued because everything flows from these. The 7 principles of consistency. Number 1, I objectively identify my edge or edges. Number 2, I predefine the risk of every trade. How many times have you folks not predefined the risk of a trade and then noticed yourselves moving stop losses farther and farther away, and your heart rate increases, and by the time it's all over, you could have made 3 winning trades, but instead you're moving that stop loss and you're stuck in a losing trade when you could have made all that money back. Number 3, I completely accept the risk or I'm willing to let go of the trade. It's like, these are the things that I can, if anybody wants to hire me as a mentor, I can drill these into your head for you. And then you can drill them back into my head because it's all good. I completely accept the risk or I'm willing to let go of the trade. Number 4, I act on my edges without reservation or hesitation. I fly paragliders, like, jumping off a cliff and whatnot, and with the motors too, I can launch from an airfield as well. And in my sport of paragliding, there's a saying that he who hesitates dies. Because if you're on the way to launching off of a cliff and you have your wing inflated over you, and the idea is you have to keep running straight over that cliff, and if you stop running, your wing will keep moving without you and drag you over the cliff. So once you commit, you have to commit. Same thing with trading. If you start missing a couple trades, it happens to me. Like, oh, I don't know about this trade, even though it's right within my edge. I don't know about this trade, and then I hesitate, I miss the trade, and of course it's a 1-to-1 and a 2-to-1 winner. So number 5, I pay myself as the market makes money available to me. It's why I always recommend that everybody trades with at least 2 positions. With at least 2 positions. I'm not saying to trade big, like you got to do 5 minis or 10 minis per position. You could do 1 micro per position, but I highly recommend having more than 1 position. Number 6, I continually monitor my susceptibility for making errors. And for me, that feels like paying attention to my breath and my heart rate as I'm trading. Just being self-aware of when my lizard brain might kick into gear and suddenly want to self-sabotage my account or my trading day, so I can just be done with the pain. Number 7, I understand the absolute necessities of these principles of consistent success, and therefore I never violate them. I didn't qualify for 4 funded trading accounts by violating these, and I have violated them. and I will continue to violate them. I'm not perfect, but I am a lot better than I used to be, and my funded trading accounts are proof of that. Oh, look at that. So over here on the right, this is Ron's equity curve in the pro trading room, and we'll go over that here towards the end. You can sign up for Tuesday, Wednesday, and Thursday instructional live trading by Ron, the master himself of Warp. And this is the actual equity curve of Ron's trading room that you can sign up for a monthly fee. If you buy Warp today, it's like, I think it's like 50% off, or I don't know, some kind of percent off or something. And then what's over here? Oh yeah, this is my equity curve for one of the funded accounts that I qualified for. Looks like 62 trades, and over here on the left-hand side, that's ticks, not dollars. So you know it takes a very good edge and very good psychology to pass just one of these damn accounts, let alone 4 of them. And I passed each one of them individually. I didn't trade copy. I wanted to prove to myself that I could qualify for more than one, so I didn't think it was some kind of fluke. And Warp and Back to the Future, I really don't think I could have done it without Back to the Future. And that's another thing. It's not just the software that you can buy from Back to the Future, it's the community, people like myself and Rachel, obviously, Michael and Ron, people who actually care. We actually care about each other and the success of everybody. It's not a giant company. Is trading a guess about the past or the future? That's a good question. That's a good question. I wonder what Michael's doing right now. He's probably, oh, I gotta do something. Wait, road trip. A little comic relief here. Oh. Oh yeah. Oh, I hope, Rachel, I hope you're still watching. Okay, check this out. Do you think this is what Michael? Which one's Michael and which one's Ron on their motorcycle trip? Oh, come on, that's good. This is obviously from Dumb and Dumber. Oh yeah. Oh, such a good scene. Oh, it makes me feel like rewatching that movie. I'd say Michael's probably in the front on this one. Probably Michael's Jim Carrey. Okay, all right, okay, that's enough, that's enough. Oh, excuse me, that never happened. Don't include that part on the YouTube recording. This is what just happened now. What happened a while ago in the past. Then this is what is likely to happen next based on modern predictive modeling. So that's really what this tool does, is it's modern predictive modeling. Software goes into historical data and with 12,000 lines of code goes back and searches for these time swing points. Know when the future is proactive versus reacting all the time with lagging tools. That's what I was doing a lot, reacting. Now I know when my trade's coming. There's still some reacting, but not more like it used to be 2 years ago. This is the plane. As traders, I'm gonna just go ahead and say I think we're all insane. We're all a little bit crazy, because this is what the deck looks like stacked against us from the institutions. I really believe that. I love this image. I remember when I first saw this image on one of the YouTube videos before I bought the software. And I remember looking at this image and then Michael presenting the information and just like, yeah, I 100% agree. The institutions have rigged the game. I mean, check this out. Violation tracker industry summary page. Like I got that other voice in the back of my head. Get to the charts, Jake. Come on, show what the software can do. We're gonna get there. But this stuff is important, even for people that are customers currently. Like it helps instill some more confidence back, like trust the dots. They're all not gonna work perfect, but trust the daggone dots. And for people who aren't customers, well, you'll see what the dots are here in a second. I think it's Bank of America. Total penalties, 264 records, 82, is that million? Billion, sorry, 82 billion, 900 million, and they just keep piling them up. Look at how Bank of America, look how corrupt they seem compared to Chase, also seeming corrupt, but twice as corrupt as Chase. The government gives them a fine, they pay the fine, the government's happy, putting that money in their pocket, and then what does Bank of America and Chase go do? Well, they just go do the thing again that costs a penalty. Government doesn't care, they'll take the money, and they just keep doing it because they're making more. This is their way of trading. They're making more off the cheat, if you will, the skirting of the regulation or whatever the heck they're doing, than they do in the fine. We simply assume that things are the way that we see things. Let me try reading that again. We simply assume that the way we see things is the way they really are, or the way they should be. And our attitudes and behaviors grow out of these assumptions. So true. I don't know if anybody's seen the gorilla video on YouTube. Went viral a way back. It's a Harvard study where they took a bunch of college kids and they had them watch this video, and the video was a bunch of people throwing basketballs around to each other, and the idea was to count how many times this group of, I don't know, 10 people passed like 3 or 4 basketballs back and forth to each other, and at the end the idea was to say how many times, and what I don't know, it was over 50%, it might have been like 65% of the people who were doing the counting in the basketballs didn't realize that a man, like a 6'2" man in a gorilla suit walked right into the middle of the video, waved his hands around, and then exited the video. So the idea was to, like, we see the basketball, we don't notice the gorilla. So what Warp does is it helps us notice the gorilla. And the big money leaves those tracks in the sand, which is what the software goes and finds. It finds those big tracks. And then we got to learn how to use the software. It doesn't just do it for us. Maybe one day, if anybody figures that out, let me know. And I like to go over this part again too, that the big money follows these routines. And this is what the software really goes and looks for. Not only these, but definitely these. Business procedures, federal regulations, internal structure, so like Tesla meetings, corporate minutes, stuff like that. Scheduled phone calls even, markets opening and closing, of course, payment receipt, distributions, fund rebalancing, filing deadlines. Like there are repeatable patterns in there. That doesn't mean that at the signal the prices actually are going to go up or down, but we do know that at those times stuff happens. And with the trading strategy, we can determine how to use the dots. Yeah, we should see a trail. We should see a trail of where the institutions have been buying and selling. How's everybody doing out there? How's everybody doing? Are you guys having a good time? Let me see how many slides we have till I can start talking about. Oh, I got only a couple more. Not all those. And I'm actually going to start looking at charts here in like 2 minutes. Institutional traders are those who trade on behalf of others and include hedge funds, investment banks, brokerage firms, commercial banks, mutual funds, pension funds, insurance companies, and large investment advisory firms. They trade large blocks of shares and therefore command a better price and literally move the market. An individual investor sells 100 shares, has no influence on the market compared to the institutional investor looking to move hundreds of thousands of millions of shares through high frequency trading algorithms, flash orders, dark pools, and insider trading. Oh, none of that stuff happens. When Goldman and others upgrade a rating on a stock, watch the sale of institutional shares after that stock. When they downgrade a stock, watch who buys. The large brokerage firms do not and never have had your best interests in heart. Oh, well, that stinks. I wish they would just have my interests at heart. Come on, guys. Those with the gold rule. Okay, I think we're allowed to start looking at some charts. Does everybody get the point? All you non-customers out there, all you customers, you already got the point. But I feel like it's good to have this stuff drilled back into our heads multiple times. I'm drilling it in my own head by yapping right now. Yeah, a bunch of different metaphors we can use. That one's Michael's, and then this one's mine. Oh, look, there's Goldman Sachs. Just cut down all these retail traders, samurai, and just walking away, relaxing, flicking the blood off his sword. That's called shiburi, by the way. I know because I practice the art of samurai and Iaido. So what we want to do is we want to draft behind. What I want to do is I want to be this guy's buddy. Can you show me what you're going to do? Can you show me how you're going to like do all these moves? Can you show me how to get really big, or at least to stand behind this guy instead of pushing? Let's stand behind him and draft. Let's draft those big retail moves. I mean, those big institutional moves. Okay, we'll get back to that slide. Oh my God, look, charts. I gotta make you want it. I gotta make you want it, people. Look at this. Look at this. NASDAQ, ES are my babies. But yeah, I noticed this on the 15-minute. Like, that's not an institutional move or anything, is it? That doesn't look shady at all. Blue dots mean down, by the way. Weird. White dots mean up, by the way. Oh, wait, what's that? Oh, all of your non-customers and customers who still get the emails, you had this time, this 7:15, you had this time in your email inbox since Monday night. What the heck? All the way up to maximum excursion favorable. Let's measure this puppy. 560 ticks down. White dots mean up. 944 ticks up. And that's the whole day. Free market down. Market opens. This is, oh, sorry, I should mention, I'm in Santa Barbara, California. So these times are Santa Barbara, California times. So the market would open here at 6:30 on the AM dial. Is everybody still here? Everybody's still here? Oh, I love when that happens. I'm gonna have a little bit more coconut water because now we're getting into the chart time. So fun stuff. Michael's like, hey Jake, you want to do those webinars for me while I'm on my motorcycle ride with Ron? Yeah, it's cool. You only have to do an hour. I don't know how to only do an hour. I get into this. Yeah, right. Like I'm gonna finish in 20 minutes. We're just starting to look at charts. What are all you 33 people doing? You're hanging out, talking trading. How often do we as traders get to talk or interact live with anybody else who knows our joys and our pains and get to talk about trading like this? This is like the once every Thursday we get to do this. Like, pretty awesome. I don't get to do it every Thursday. Oh, I'm gonna have some fun. Okay, so what's up with that? What's up with that? So this down here for your non-customers, this is that histogram that, sorry, I'm moving away from the mic. This is that histogram that was sent out in the emails on, I believe it's sent out, I don't know what time it's sent out on Tuesday. Oh, excuse me. Just gotta stretch my back for a sec. Okay, or coconut water. Does anybody want to buy? Any non-customers want to get on board and buy software just from looking at this one chart? Come on, buy now, come on. Yeah. Should we look at the NASDAQ 5-minute? Let's look at the NASDAQ 5-minute. Let's work our way down. I mean, I guess we look at a 10-minute. I don't know if anybody trades 10 minutes. Oh, I must have mispronounced her name. Janice has left. Oh, Thomas Long has left the meeting. Joys and sorrows. Oh, Mark Long. Jeff, joys and sorrows. Thanks, Mike. I always learn something, reinforces purchase of warp. Right on, Mike. Yeah, that's what I'm saying. Like, that's what I would watch Michael. Plus, you never know what Michael's going to do, and you never know what I'm going to do. I think I've hosted a bunch of these now. So yeah, white dot means the initial forecast for a white dot, which is the stock colors, standard colors, is up, and the initial forecast for a blue dot is down. There are some intricacies that we can add to these dots, but right now let's just go over a few simple. I'm going to leave that open there. Let's look at the NASDAQ 5-minute. I think it was today on the NASDAQ 5-minute. It was crazy. Like today was, anybody else trade today? Today was a pain in the butt. Yesterday was good. Well, not good, but it was easier for me in my strategy yesterday. Okay, so there's a few different setups. So here again, we have a 605 blue dot here. Let's do this. So I actually really have no idea what's going to happen over here. I didn't trade the 5-minute chart today. I traded the 3-minute. And even then, it's not like I can remember all these things. Okay, so at 5:35, we would, you know what? I'm going to leave the open price lines. These are open price lines. And then here's another one here. Here's another one here. I don't trade without open price lines. Software plots those automatically. Here, this dotted line, we call this a dot price line, or we can call it the stop price line. These dots, by the way, are placed 1.5 times the average true range of the last 7 candles. So 1, 2, 3, 4, 5, 6, 7. That average distance is from here to here, and the software will do that automatically, and that can be adjustable, so you can make your stops tighter, you can make them wider, and then, you know, this is a suggestion. The open price line always plots at the open of the next candle. Huh, just kidding. Nope, it actually plots at the close of the signal candle. But it gets close to plotting at the open of the next candle after the signal candle. I guess that's why we call them open price lines, but really this is the signal candle. So when we say signal candle, we mean the candle that is directly associated with the dot. Signal candle. Signal candle. Actually, you know what? Let's look at this. Let's look at this 2:25 a.m. What is that? Is that just pre-market? That's still Asian session or something? I don't know. I try to not concern myself too much with pre-market. Anyway, so when we have very simply, I should explain one more thing too. This is the 120 EMA. Euro session. Oh, sorry. Yeah, I get those confused. Euro session, of course. Thank you, Mark. So this is the 120 EMA. And that's really the only other thing that we're going to be using. This is everything that we're going to be using to plot our charts, see what our wins and losses would have been today in a few of these. So if we're above the 120 EMA, and we can see that the 120, it just changes colors. That's a pretty cool, nifty little thing. Comes with the software, actually. If we have a white dot that the signal candle closes above the 120, we consider that a signal with trend. So Micah would write something like this: STW, signal with trend. And then here is another signal with trend. So signal with trend, and then that is forecast to go up. And don't forget, these times were sent out a couple days in advance via email. So this, just so everybody can see, I want to show you that we're at stock settings. Before anybody asks, what settings were those, guy? Stock settings. Counter days 714, swing strength 8, signal dots only. That's it. And then here's your volatility stop offset 1.5, and the ATR is 7. So we're looking at seven bars back to find that average. Oh, what was that? Weird. I don't think I've adjusted anything. Okay, so there's a couple different ways to trade this signal with trend. One way is market enter long, because this is a long signal. Market enter long as soon as that signal candle closes, which would be right here, and then just hold it to the next dot. Signal with trend. I just assume that everybody knows that what these stinking colors mean. White candles are up candles or bullish candles. Blue candles are bearish candles, or down candles, selling candles, whatever you want to say. So I hope I'm not telling. I mean, I'm assuming everybody knows that a selling candle closes at the bottom and a buying candle closes at the top. So as soon as this signal with trend, this white dot is above the 120, as soon as that candle closes, we enter market, and yeah, there'll be a little slippage. Remember, our stop's down here. And then we just hold that to the next dot, because this is a selling candle. We'd want to get out of the position. So here, oops, well, that's not what I meant to push. Buy, sell. Buy, sell, and get out. And our stops are down here. Okay, so that's the simplest way to trade a signal with trend. I'm going to show you folks the way that I trade signals with trend. That's with one position. Remember, I said if any way possible, it's so much better to have more than one position. So the way I trade signals with trend is I wait for a candle to close above the open price line. So here at 2:25 a.m., if I'm awake, I'm not getting in immediately at the close of this candle, because I'm going to wait and confirm. I want to confirm that the banks really are going to do what the forecast is. What's really going to happen? I want to wait a second. Okay, here's the forecast. Well, let's wait to see if it starts raining. That doesn't make sense if the price is going up. Let's wait to see if I don't know, the sun rises. I think the sun's going to rise. Let's wait to see if we can get a candle closing above the open price line. And that happens right there. And then what I want to do is I want to ride one position, yeah, all the way to the dot, but I want a way to figure out how to manage my trade and tighten my stops up, right? So as soon as this candle closes, this is my entry candle here. As soon as that candle closes, I'm just going to blow this up. I have a Fibonacci tool that I made that's basically, I've made it into a risk reward tool that, because the native Ninjatrader risk reward tool, you guys know what it looks like? Let me show you this. It's annoying that it doesn't have more than one position. I mean, yeah, you could hand draw it in there, but I don't know, I backtest a lot, and that's kind of annoying. This is like as much as it can do. As far as I know, I don't think there's any, you can't add, yeah, you can't add anything like another one to it. So, well, the basic strategy is wait for a white dot above the 120, then wait for a candle closing above the open price line, enter market, stop goes a few ticks below the wick of the entry candle. I actually allow myself, depending on the time frame, 5, 10, maybe even up to 15 ticks below that wick, but I keep the risk reward tool at the base of that wick, because what that does is it basically gives me a customized range forecast for the up move based on the open price line puncture candle. We can also call this an open price line puncture candle. White dot means up, puncture through OPL, open price line. So we actually have, I usually trade with 3 positions. So my stop is here. I'm actually gonna have 3 stops down here. And my target 1, I'm sure most of you probably already guessed it. Target 1 is here on this line. Target 2 is up here on this line. So as we can see, on this particular trade, I had no idea. I didn't look at these charts before I started this webinar. I mean, I looked at that 15-minute I saw, but I had no idea it was going to happen in this pre-market. So it's kind of nice that these are working out. So entry 1, exit, first target hit, 34 ticks. So now that target has is gone. We nailed that target, and that also means that we only have 2 stops left. Where is the third target, you might ask? Well, the third target is we're just simply holding that until the next dot. There's multiple ways you could do it, though. You know, you could have your third target as a 3-to-1. So what's cool about this strategy is we have a 1-to-1 risk reward. We have, sorry, a 1-to-1, 1-to-1, and then we have a 2-to-1, 2-to-1 on our, as soon as our first target gets hit, then with the remaining stops, we move those to break even. So now our second target, if it does get hit, and our third target, which is the close of the next signal candle, we have no risk. Maybe save the commissions, but we can just we can upfront run our stops a little bit, 2-3 ticks, get the commissions. And as we can see, our target 2 gets hit. And unfortunately, but still fortunately, we go all the way up to 170, and then it starts to move down sooner than expected, and we see the trade come back against us 123, but doesn't matter because we're at stops or break even, and we still make that 49 ticks off of that. So I hope that makes sense. I've gone over this before in webinars, but I feel like it's good to go over again. This strategy really does work, but mainly it's the dots. This little thing that I've come up with here, I can't be the only one, and why would I never came up with it without the darn dots? I have more complex strategies and plethoras. If anybody wants to book some mentor hours with me, we can do that, but I don't want to get more complicated than this for purposes of the webinar. So at 350, we have a blue dot, but we're above the 120. So we can't sell. We can only sell this blue dot if we're below the 120, and obviously we are not. Let's go over one more long. Oh yeah, see, this is a perfect example of why I always place my stop. Usually it's about 10 ticks below the wick of the puncture of the open price line candle. So here at 425, we have a signal with trend. We're closing above the 120, but I'm not going to enter at the close of that candle. I'm going to wait and see if I can get one candle to close above the open price line. It happens right here. We'd mark it enter. And as we can see, The reason that I always 10 at least, well, on a 5 minute, I'm going 10, 15 ticks away from that wick. I've seen it happen time and time again, where it'll come back and it'll get it. Just that alone makes me realize how rigged the markets are. Look at this damn stop run. Look at that. I'm getting distracted. Stop, you're getting distracted, Jake. So we would enter here. Our stop would not be at the dot price line. Our stop would be not right at the wick of the entry candle. Here it is, entry candle. It'll be 10 ticks below. And it's probably 10 ticks. Let's measure it. Let's straighten up our line. 3 ticks. Oh man, we would have been totally fine with 10. 10's probably way down here. Oh, not even. Okay, whatever. We'll make it 5. Either way, we don't get stopped out, so that's good. And we just barely don't quite hit the target here. If we're going to be exact, when there's slippage, I just deal with the slippage, but I don't move the target. The target stays. This would have been painful to sit through for 5, 10, 15 minutes, and now it's finally getting back up to where we almost hit target here. And then lo and behold, it does hit target. And coincidentally, see, these are the little things that, after studying this software and the NASDAQ, primarily the NASDAQ for 5 years, but 2 years with software, it's these little things that I get excited about. Like this entry happens to close and hit the target right at the same exact spot that the blue signal dot comes in. Sorry, it was one candle back, even better. To the tick. Like, what the heck, man? Look at that. That's ridiculous. Something's going on. Something's definitely going on. So let's just go over this trade again, because I mean, I really feel like I want people using this method. It does work. It's not going to give you a winning day every single day, but it's also not, you're not going to lose a lot of money if you do have a day where it's like break even, or maybe you have a couple losses more than your wins. By the end of the week, I've never back tested a week with this strategy by the end of the week where you're not in profit. Again, hypothetical, don't quote me on that for all you regulators out there. These are hypothetical results. Disclaimer. Coconut water. 36 people. Sweet. Oh man, it's so fun having everybody here. Okay. So let's get simple. Let's simplify this trade for everybody, because this is, both these trades are perfect examples. I really had, honestly, I had no idea that these examples were even going to be here until till right now. Okay, so signal with trend, white dot, 4:25 a.m. We close above the 120. We close above the open price line on this candle. We enter market. We don't hit target. Our stop is a few ticks below the wick of the entry candle. We don't get stopped out. We hit target 1 here. Our 2 remaining stops. Oh, sorry, I should put the stops in. We have 3 stops all together. We've hit our first target, so now we don't need that stop anymore. Since we've hit our first target, we simply move our remaining 2 stops, because we're using 3 positions, to break even. We hit our second target right at the close, or a couple seconds before the close of the 5:05 selling dot. And that third position, which was our runner, we happened to close right at the same time, basically 5:05 a.m. And there we have it. So, I mean, man, see, this makes me feel like I should wake up at 2 o'clock in the morning and just trade these on a 5-minute chart. Yeah, right. I got a 7-year-old. I ain't waking up at 2 o'clock in the morning. I guess if I could make 2 trades like that every single day and it was guaranteed, but guess what? We're traders, nothing's guaranteed. All we have is an edge. And for everybody who has the software, we have an edge and we have professional tools. I can't believe that I use used to think that I would be able to crack the market on my own with free junk that was included with Ninjatrader for free, like stochastics. Stochastics don't work when the market's trending. What? They don't? I don't even know if they work when the market's ranging. MACDs, EMA crossovers. Thanks. I'm going to spend some money and get a professional. I'm going to get professional trading equipment. I don't want to show up to a job site with a do-it-yourself grandma hammer. No offense to any grandmas who are listening. If I'm going to show up to a job site as a carpenter for the first day, I want to show up with like the coolest hammer that those guys have ever seen. Like, oh hey, what's up guys? My name's Jake. Good to meet everybody. Dude, what kind of hammer is that? Instead, it would be, oh hey Jay, hey guys, my name's Jake. Good to meet everybody. And they would say, is that your grandma's hammer, bro? And then I would be embarrassed, and then I would want to leave. So there you go. Okay, so there's two signals with trend. This blue dot here, 505, I ain't taking that short. I mean, as if anybody could possibly predict this stinking stop run right here, right down to the 120 EMA, by the way. Let's see what happens at this 535. I'm getting nervous. I don't know if my strategy would work is going to work here. So here's a close above the open price line, signal with trend. I honestly have no idea. Let's see what happens. Oh, looks like we lose a little bit on this one. Doesn't quite hit our first target. So we would enter here, and then we have 385 tick losses. But again, over time, if you keep taking all of the trades as necessary, you do end up making money. Geez, crow. Yeah, this is that morning that I was talking about. Oh yeah, here's the open here at 6:30. Does anybody have any particular, now that I've just showed the strategy? Or yeah, I show up the office with a number 2 pencil, totally. Can you show your settings for NQ? Yeah, sure, it's just stock settings. Stock standard, swing is 8, calendar days 7, 14. I'm using the exact settings that were emailed out to everybody, because that wouldn't be right if I were to change the settings. Although I don't personally trade with swing 8 on NASDAQ, I trade with a swing 5. We can, just for fun, let's just see. It's my webinar today, I can do what I want. So there's what the emails were. Let's see what my settings would have given. Swing 5, that's the only thing I change normally. Looks like, oh yeah, it's like pretty much the same actually. Oh, we would have been out a little early here at that 750, 635. Oh yeah, see, look, this is a swing 5. Just bear with me for a second while I look at this. That wouldn't have even been a trade this time. That one would have been a small loss. This would have been no trade, no trade. This would have been target 1 at signal. This one would have been 77 instead of 385 losses. No trade here, no trade here, no trade here. This is what today was a mess. There's a lot of stuff that was not syncing up for me today with my strategy. So I actually don't trade the 5-minute chart personally. I actually trade the 3-minute NASDAQ most of the time. Okay, so let's look at, I don't know. I mean, I guess, well, let me switch back to the swing 8 so it's the same as the emails. First of all, swing 8. Okay. I think I'm gonna have an Altoid now. Altoid, anyone? Altoid. Okay, so there's another trade that Michael calls a, what's he call it? A puncture trade? No, this is a, does he have a name for it? The EMA puncture trade? What's the name? I just call them EMA punctures. So in this window of between 6:05 a.m. and 7:55 a.m., we have the banks have been known, the banks, institutions, big players have been known to sell the market. So, oops, come on. Oh, hold on a second. I'm trying to find my, it's not working. Here, hold on one sec. Region highlight. Selling window. So I like to call these windows of time. Just because there's a blue dot there at 6:05, that doesn't mean I'm going to just short the market. Although it's crazy how well it works if you were to do that. Even if you didn't care about the EMA. 6:05 a.m. pre-market short, 257 ticks. Let's not even care about the EMA for a second. I have no idea what's going to happen. 7:55 a.m. Who cares about the EMA? Long. 8:45 a.m. short window. Stopped out. 9:55 long. 10:05 short. 11 a.m. long. 12:15 short. Break even. Oh, 3 ticks. Woo! 12:50. By that time, I'm done trading. I ain't trading at 12:50. Stopped out. If you did, I have been known to be that dumb. By the way, dumb money afternoon. And then that's it. I've seen this happen so often with the NASDAQ around 12:45. So let's push it up. Take your profits. So even if we just went dot to dot, I don't know why I had that there. I'm not taking that short. Oh, yeah, I am. I would be taking that short if we're doing both directions of the EMA. So what does that come out to? Does that give, like, I don't know, that's a crate. Let's get the calculator out and just see. Did I get all that right? Shift F1. Selling window. Selling window. Selling window. And then these are buying windows. So from pre-market, 6 o'clock a.m., that's a reasonable time to start trading. Let's see what we got. Cue the music. 257. Call me out if I'm getting something wrong. Plus 293, plus 26, plus 114, plus 133, plus 3. 826 minus 157 minus 219 equals 450 times $5 a tick times 5. Oops, just made $2,250 just going dot to dot, not giving a hoot and nanny about that EMA. So yeah, there you go. There you go. Like, how is that even possible? Because this software, this 12,000 lines of code, look at this puppy. Let me show you under the hood here, you non-customers. Hey, you non-customers, what are you going to do? Are you going to leave this webinar? You're going to go trade with some stochastics and some golden crosses and some golden showers? Yeah, I like to talk to my brother. He likes them golden crosses, and he's like, yeah, it's called a death cross when the 200, when the 50 crosses at 200 on the way down. I was like, no, it's called a golden shower. It's called a golden shower. Use warp. What are you stupid? Calm down, Jake. Calm down. It's okay. It's okay. See, this is what happens after I've been doing the webinar for an hour. I need another mint. Don't worry about that. You don't want to see that reverse polarity thing. You can adjust the days you want the software to look back. You can tell it how sensitive to be. You can, dude, you can even put a secondary data series in there and have the software look for the, I don't know, for instance, the crude future times up, down, while looking at the NASDAQ chart. You can adjust the volatility stop. We're not even going to get into how cool these patterns are. You non-customers, you don't even want to know how much fun your brain's going to have trying to understand these patterns. So, oh boy. I remember when it finally clicked for me, I felt like a genius, like I got it. Oh my God. Oh my God. You can adjust the EMA right here on the chart. Shoot, SMA, EMA, HMA, WMA, VMA. Yeah, I've tried all of them. EMA 120. Yeah, it's cool because it's really not, I mean, it's robust as far as the options, but it's not crazy. It's not crazy. Oh, we can also have the software look back trading days instead. Certain markets work better if you're using trading days instead of calendar days. And Michael or myself, we will help you set up your charts before you start trading. So when you purchase the software, it costs $1.5 million, by the way. When you purchase the software, so now it's going to sound cheap when I tell you how much it costs. That's a little sales trick, yeah. Even though I'm not the sales guy, I'm the mentor guy. What was I talking about? I think maybe the webinar is gonna be over soon because I don't know where I am anymore. I think I'm getting a little loopy. What has to questions? What? I think I need one more mint. Jake, what's in those mints? Don't worry about it. Don't worry about my mints. Keep your hands off my mints. We can adjust the colors of all sorts of stuff. Oh, that's what I was talking about. Yeah. So when you purchase the software, everybody's favorite person here at Back to the Future, Rachel, will literally install it for you. Nervous about how to install a super ridiculously amazing professional software you just purchased? Don't worry, Rachel will install it for you and go over a bunch of stuff. I don't even know if I guess I can tell you guys in a little bit. How much longer should we go? Do you guys want to see me back test 1 billion more trades? Keep me here till it's 2 o'clock my time. You want to keep me here till 7 p.m.? Should we have a vote? 7 p.m. 33 people still. Oh, attendees 35, 33 people still. 2 staff. So if anybody wants to purchase the software, David, did you put David's the actual guy in charge of sales. Did you put your contact information in here yet, brother? I don't know. Let me adjust this question thing. Does anybody have any questions on my strategy that I was going over with everybody here? It's a little messy now, but got all that stuff over there. Does anybody have any questions on this? It's pretty straightforward. Oh, what have crude with NQ similar? I did a lot of back testing the crude combo with the NASDAQ, and it didn't really seem to make much difference. But those are the only 2 that I've tried. So I mean, you can try all sorts of different combinations. I kind of went crazy with just trying too many different things, and I just needed to settle on something. The first entry was with trend. Yes, Robert. So both of these, 225. This is our buy dot, and then we just simply wait for a candle to close above the open price line, and then we measure a 2-to-1 and a 1-to-1. You can use Ninjatrader's native RVR tool, of course, wherever that is, to do it instead of making a Fibonacci thing like this. But yeah, you sign up for mentor hours with me. I'm going to put my email in the chat. I'm going to put David's in there as well. JACLB at back to the .com. Oh, did I get that all right? Yes, I did. Here's mine, and here's David's. There we go. Okay, so if anybody wants to schedule mentorship hours or whatnot with me, yeah, reach out to me. If you want to purchase the software, reach out to David or me, I guess, if you guys have questions for me, that's okay as well. Not really sure what the protocol is on that at the moment. Okay, nice. Okay, now, okay, so Robert, you get it now? Do you look at YM? I did look at YM. I did not yet, but we can look at it. You want to look at YM? Let's look at YM. I actually did look at the Dow today. I took a couple trades on the Dow with real money today on my performance accounts. Yeah, so yeah, my strategy seems to work pretty good on the Dow. I like the Dow. It's like a slow sister to the Nasdaq. 50 cents for a micro tick, $5 for a regular mini tick. So this is kind of cool. Here at 6:15 a.m., we have a signal with trend down, selling window. Our next selling window is over here, buying window. Sometimes people like this. Come on now. It's really buying window, selling window. This is what I mean by windows. Sometimes people like to see it illustrated like this. And obviously you can change the color of these dots if you want red and green or pink and purple or whatever you want. So here's our selling window. Here, oh geez, from here to here. Oh, keep doing it. Keep doing it. From here to here. And we're forecast to go down at 6:15. So I'm going to wait for a candle closing below the open price line. Here we do. We got it right here. Not there. There. This is the candle closing below the open price line. We're going to enter right here at the close of this candle. Then we're going to strike our fib tool RVR. Our three stops are going to be right. Oops. Our three stops are going to be a few ticks above this wick. Our entries here. Target 1, target 2. Target 1 is hit here. Michael would appreciate that little noise that I just made because he does that too. Our target 1 was hit, so that's gone. That means we have 2 stops remaining. Those get moved to break even. And it looks like our second and third position get taken out of break even. How does Ninjatrader make those cool noises like that? So 58, 3 and 1, however you want to do that. Or, you know, oh, I'm sorry. And then so we don't get to ride our other trade. our third position because we had taken out a break even. If we just took that signal to signal, it would be 615 to 720. If we cared about the EMA, we would not. That's up to personal preference. I've seen some crazy automated backtesting Excel spreadsheet results from a new upgraded update thingamajig that may or not be coming out soon, wherein it seems that some markets actually you perform better with not caring about the EMA. Buy when it says buy and sell when it says sell. The great debate for me still remains as pay attention to the patterns or don't pay attention to the patterns. Care about the EMA? Well, I guess there's a few things. Care about the EMA or don't care about the EMA. Care about the patterns, don't care about the patterns. Care about the OPL, don't care about the OPL. But what's cool is no matter what, when you average it all out, either way, Warp gives you a stinking edge. So that's pretty amazing. So buy dot 720, buying window, go down, going up, and break even. 810, selling window, and we're below the EMA, but right now we're not caring about it, and we get a loss there. What are we on? Oh, 5 minute, okay. And sell dot, almost get our stop taken, and it's 11 tick loss here. Loss. This is why people say to actually pay attention to the EMA. 1140 loss. This is what I was saying. This day was just oops, it was just junk. This is dot to dot. Let's see how my method would have performed today, since this was pretty junky. So I only take signals in the direction of the 120. So this wouldn't have been taken at all. It's kind of cool to compare two different systems. This trade here, this would have been my entry candle. I don't know where that wick is. Wick's right there. Target 1. Target 2 is not hit, so it's target 1 is hit. We move those stops to break even, and those to break even. Here, oh, looks like in my other study, I forgot to actually incorporate that one for the dot to dot. So this is our first candle closing above the open price line. Oh, please come back. Sometimes I'll get stuck like that. And we're closing all 3 positions at the dot because we're at the dot. No trade allowed here. Looks like we got a small loss here. So we would have went long there. Oh, and then we would have had another opportunity with another close above here. It's like nothing came of that one. Well, 6 ticks came of that. Hey, 6 ticks matter. 1210. No closes above the open price line, so we wouldn't have been long there at all. This is a short window, wouldn't have been short there at all. Let's see, just for fun, let's see what we got. 34 people still here. Hot dang. Spread these out a little bit so we can see them. One second. Trying to keep it straight. Can you tell I've done a lot of back testing? Well, I don't usually back test 2 different strategies on the same exact screen, so it's a little sloppy. That's all these. That's all these. That we should put over there. That's all these. Let's do a little math. Let's do it. Let's do it. And then let's do it. Let's do the math on these two strategies on this on the YM 5-minute, and then let's call it good because I'm running out of steam. Oh no, get away from me. And that one was that stop out. That was that stop out. Okay. Calculator. Let's do the simple one first, which is the dot to dot, and we're not paying any mind to the 120 EMA. Okay, so we're going to be looking at this, anything that's not associated with the little fib deals. Okay, so this win, this loss, this win, this loss, and this loss and that loss. I'm betting that this day comes out with a loss on the dot to dot, not caring about the EMA, but then we could also do it caring about the EMA and see what happens. So let's actually do that too. Why not? 99 plus 5 plus 81. That's it. Yep. Minus 29 from the looking backwards in time now. Minus 59 minus 54 minus 11 minus 83. So minus 51. 51 times 5. So a $255 loss. It's actually not that bad. You know how easy it is to lose way more than that, and that's not paying any mind to the EMA. So let's readjust our simple dot to dot and only take longs above and shorts below. So this one's valid. This short, this short. We're going to include that one. We can include this one because that was a long below the 120. This one, yep, we have to include this one. This was a short below the 120. We can't include this one because this is a short above the 120. And by the way, the dots can just continue to alternate. White, blue, white, blue, white, blue. This was a valid loss with the, yep, and we wouldn't have had this loss because this is a short above the 120. We would have taken this long above the 120 though. Let's see what that would have done. And then we'll do my 3-position strategy and see if we come out positive. Obviously there's more positions, but that increases our win opportunity, but it also increases our loss opportunity. So clear. And so we're only counting the ones in the gray boxes. Looks like this is this is going to be even more of a loss. It looks like 99. Oh yeah, clearly minus 83 minus 54 minus 29, 67 times 5, so 335. Either way, like you'll have that. I mean, if you trade dot to dot, you will have days where you don't make money. I'm not going to sit here and sugarcoat trading for anybody. Yeah, our software costs money, but nobody's ever invented trading software that has winning days every single day. That's just not something I've never heard of it. I've read all those market wizard books too, and even the billion-dollar moguls, like they'll have losing weeks, months, quarters. Therefore, they have losing days. But it's all about that edge. So, okay. So it was like a 250, 350. So the average of both of those, like we'll say minus 300. Let's see what my strategy does. And then let's call it. I'll show you guys some salesy, pitchy stuff, even though I'm not the sales guy, but that's what Michael wants me to do. Okay, so we're gonna start counting all of the ones and triples. Okay, so this one, this one, this one, this one, and that one. Oh, looks like it's gonna be good. I can obviously. So I'm just gonna go down the line. 3 plus 1 plus 58 plus 1 plus 30 plus 1 plus 48. Oh geez, I have to start over. I don't even know what I did there. 3 plus 1 plus 58 plus 1 plus 30 plus 1, oops, plus, oh, daggone it, fat fingers. Oh, you're so close, Jake, you can do it. 3, 58 plus 1 plus 30 plus 1 plus 48 plus, wait a minute, that's not right. Oh yeah, it is. 48 plus 49. Correct me if I'm messing anything up. Plus 6 plus 8 plus 4 equals 257. So that is all these, all these, all these, all these. Okay, now we have to take these out. Okay, 257 minus 32 minus 29 minus 29, 167 times 5, $835. Does anybody care about the open price lines like I do yet? I mean, we could do this for days, and almost all of the time the open price lines make a difference. And that's if you're not using patterns, you know, like if anybody wants any training on advanced trading on patterns, reach out to me. We can schedule some mentor stuff. Dave, do you want to, I know Rachel didn't talk about this, but did you want to come in and introduce yourself, or you don't have to. I just want to make sure that everybody has your contact information. It's totally cool. If not, I don't even know if you're still here. Okay, where am I? I need to do, how's everybody doing? You have any questions? Hey, Marco, how's everyone in trade? Which markets he's trade? Okay, let me just look at some questions here real quick, everybody. Oh, wow. I was a little late. Got that done. Overdue pencil. Can you show a non-time chart, Renko or volume? Yeah, if you want to see some, yeah, let's do it. Let's do volume. Let's do volume on NASDAQ just because I'm selfish and I want to see it. Let's leave that. Let's switch this to ES. I mean to NASDAQ. Larry, wait, Larry? Larry, is it? Renko and volume charts, to me, in my opinion, need to be tuned to the market's volatility of each day, even each hour or half hour. Unless you have a particular volume that you would like me to look at, or a particular brick size for a particular market of Renko, Larry. Larry. Where is your answer? Larry, calling Larry. Did you have a, because I'm kind of curious too, Renko. No, just wanted to see the output. Oh, okay. All right. Well, let's just do volume because I don't need to, it's easy for me to do volume. Oop. Oh, it's not easy if my computer freezes. No! Does everybody still see my screen? Oh, son of a gunski. Must mean we had, yo, I didn't do anything crazy. All I did was try let me try my connections here. Hold on, everybody. Disconnect. Reconnect. Oh, I heard things. Oh. Ninjatrader. Looks like it's It looks like it's responsive. Oh, you stinking. It's just this one chart. Maybe I can get around it. Here, hold on. Oh, almost. Oh, haha. Data series. Let's look at, sorry, volume. I don't know, 5,000. Loading, loading, loading. I'm gonna have to load it again too. Oh, I shouldn't be. I don't know how much data I have on here. I might have needed to pick a bigger volume than that. I might have 30. I should probably have 30 days of data on this. Oh no. Oh, calculating. That's a good sign. Oh, now it's telling me data shortage. Here, hold on a sec. 3 days. Try 25,000. Okay. So whenever you're using TimeWarp, it's recommended to always use 30 days of historical data or more. I don't think I've ever loaded a 25,000 volume chart. Tick charts are cool. Volume charts seem to do this to me for some reason. It's still loading. I think it's because of the amount of data. Okay, this is the last time, and then I'll just throw on a tick chart. Yeah, nobody wants to see my computer load. Yeah, I did. I just switched it to tick, Larry. Thanks, actually, yeah. And now it's doing it again. Might have something to do with that other chart that locked up. Might have to restart Ninjatrader. Yeah, because see this other chart that's locked up here? Yeah. Way to end the webinar with a dud, Jake. Oh, look, the YM chart still likes to work. I don't know, Lawrence. I'll try one more time with the tick chart on this, and then I'm gonna be over it and frustrated. Okay, 30 days. That's good. I guess we could try 1,000. It's a lot of data. I don't know. Okay, what else we got going on? Have you understood how there's Hell, no, I don't think I have. Yeah, it's not letting me load enough data. Usually when I use tick charts, I don't use Warp. You could use a tick chart. I have gotten them to load though. I think it has to, I might just have to restart my Ninjatrader. I mean, who cares? Why not? I'll just restart it while I'm answering these questions. Almost done here. In your opinion, can this be a standalone system, or do you use it in conjunction with other tools? Oh, it absolutely can be a standalone system. Oh, but you left, Mark. But yeah, absolutely 100% standalone. No problem at all. Yes, Mike. Okay, thank you. Oh, look at that. It literally won't even let me close my Ninjatrader. All right, we've seen enough. It works, darn it. All right, okay. So picture this as you, and this was me actually when I started out as a customer, and I really did. I felt like I was all alone, and then I purchased software and got on board with Back to the Future, and suddenly I was like, I actually have people that are helping me do things, set things up, and I can actually call them on the phone with real phone numbers and send them emails, and a real person gets back to me if I have questions. Insane, just that alone. So we'll be like your pit crew, basically. You win battles by knowing the enemy's timing and using a timing which the enemy does not expect. The Book of the Five Rings, it actually means the Book of the Five Scrolls, by the way. So we're going to give you the software, give you the setup, give you workspaces and templates for any instruments that you want. So stuff that we already know works well for whatever time frame that you want to train. We'll give you the training. So the software does come with training. We'll give you the discount, and we'll give you a trading future based on truth. Gann's quotes on time. Oh, I will read a couple. W.D. Gann, time is the most important factor of all, and not until sufficient time has expired does any big move start up or down. Time is the most important factor in determining market movements, and by studying the past records of the averages of individual stocks, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. Well, that sounds a lot like what Warp does. There is a definite relation between time and price. Cycles. Okay, yeah, I mean, now by study of time periods and time cycles, you will learn why tops and bottoms are found at certain times, and why resistance levels are so strong at certain times, and bottoms and tops hold around them. Successful trader studies human nature and does the opposite of what the general public does. Oh, here's my tool, my tool slide. So I don't want to show up to a job site with this one, with this child's hammer. I want to show up to a job site with the appropriate tool. Sometimes it's a sledgehammer. Sometimes it's a mallet. Sometimes it's just this really sweet blue professional looking roofing hammer. But the last thing I want to do is show up to trading without professional tools. I'm just over it. I'm not going to do it. And that's why I became a customer 2 years ago. So we have a serious choice to make, anybody who's not a customer. Free lagging indicators that the 95% of losing traders use, or a one-of-a-kind professional institutional grade trading software. Why wait? Oh, well, maybe next month. I don't know. You know, it's like, there's a thing called opportunity cost. Time matters. Why wait? Invest in your future with Back to the Future trading. So included, there's a lifetime license, 2 lifetime licenses. So you can install it on 2 computers, and honestly, they don't care who. So you can install it on lifetime licenses on 2 computers, free lifetime updates on the software on Warp, white glove installation and setup. That's what I was mentioning with Rachel's help. A free video archive, training, basic to advanced, limited time promo code. That's Warp Off. So if you input Warp Off in the, or you know what? Let's see, have this pulled up here. One sec. Back to. So here's the website, product store. I hope somebody purchases the software. I need somebody new. I need somebody new to teach. Come on. TachEon Warp. Oh, and by the way, look at all these. I don't know if anybody who hasn't bought the software yet, check out these reviews. None of them are fake. They're all receipt carrying real customers. How many? Wait, let's go back to that. 5 stars. 1, 2, 3, 4, 5 stars, 81 reviews. Check those out if you're not sure yet. TachEon TimeWarp. Remember that code, all lowercase, WARP, WARPOFF. And then you just scroll down to the bottom. There's a price tag. Honestly, that's a deal. It's already a deal for everything that comes from the software, not just the software itself, but the edge, the strategy, the community, the people. So you click on the Buy Now button. Here's where you can elect to join Ron's Pro Trading Room. Okay, so yeah, it's 25% off if you purchase the Pro Room at the same time as the software. But for right now, we'll click Buy Now. Go down through your purchase agreement. Click X. Here's the Pro Room. If you didn't want the Pro Room, then it's one. That's for 1 month. Then you just click 0. I guess you got to do that again. And let's make sure that promo code. Let's make sure that promo code still works. Warp off should be $500 off, under $2,000. And honestly, like you can. That's the software that. I mean, I've passed performance account reviews with this software, and will continue to do so. Yeah. So let's see what else. So the one-on-one training with me, I'm not exactly sure who's officially the person who's supposed to do the initial training. It was me. Well, it was Michael. Oh, it still is Michael. Then it was me, and I think it's Michael again, but he's on the motorcycle trip. So there's also tons of videos. I mean, it's really not that complicated, unless you want to get into more advanced stuff like the patterns. But tell you what, though, if anybody who doesn't have the software buys the software today, then I'll include 100% include 1 hour of mentorship training with me. That's $150 value. It's $150 an hour for my mentorship stuff. And also, if you want, during that hour, I can tell you the method that I used to pass the Apex, and like how I did it, like what my risk model was. So why does everybody even know about Apex? How does the PayPal later work? That's a good question. Yeah, Apex, like I don't trade with my own money anymore. I trade with Apex's money. Yeah, I can still lose money, but it's not mine. Hallelujah. I don't know why it took me so long to just crush my little ego and just not want to use my own money anymore. Like, why? I have a 7-year-old and family and stuff. I don't want to risk my own money. Now when I can use somebody else's. The PayPal later? I don't know. Let's find out. Don't see the secure PayPal browser. Will help you relaunch the window to complete your purchase. Okay. I don't know. That's a good time to mention David again. Call David. David, what's your phone number? I don't even have your phone number yet. Oh, looks like David has a special package for new customers. I didn't even hear about that. Hot dang. Well, that's why David's a sales guy and I'm the mentor guy who does the webinar guy. So yeah, reach out to David. Apparently he's got a special package. Maybe it's even better than that $500 off, or maybe it's $500 off and there's like other stuff that they're gonna include. I have no idea, but I would certainly reach out to David. I'm gonna put his email in the chat again in case anybody, I don't know how it works on the other end of this chat, if it just disappears or David at back to the future trading.com.
Yeah, I put my phone in there too.
David.
Jacob.
Oh, nice.
Yeah.
You did? Okay, good. Sweet.
Yeah. 727-742-2626.
Right on. Sweet. Well, thanks, David. Yeah, there's still 24 people here, so some of them are not customers yet. I can't tell you exactly who, but somebody needs it. Somebody wants it. Reach out to David. Thanks, David, for being here. I think we're pretty much at the end. David, did you want to say anything, or you're?
No, that was great. Yeah, great presentation. And yeah, give me a ring or text, and I'm available right now or later or tomorrow,
Sweet.
whatever's convenient for you guys.
Okay, great. Well, thanks, David. Have a good one. I'm gonna just make sure that we didn't forget anything. Yeah, you're welcome. Oh yeah, here's my number if you want to reach out for mentorship stuff or anything like that. 858-205-7827. And then there's my email again. There's another shot of my face. It's not a bad one. Yeah, all right, everybody. Well, thanks for hanging out. We'll see you guys next week. Michael and Ron, wherever you are, thank you for inventing such amazing software, and everybody who has participated in the event today, I thank you. And we will see everybody next week. Thanks, everybody. Happy trading. May the trading angels shine upon your clicker fingers. Buy when you need to buy and sell when you need to sell. Okay, over and out.